Hey Dreamers! This month I had a massive increase in passive income. I received over $7,600 from dividends in January. In this video, I'll show you the stock detail that adds up to that total, how that compares to past income months, and at the end, I'll tell you exactly how I increased it so much. Okay, so here we are in my spreadsheet. And as you know, stocks usually pay out quarterly. So whatever paid out in October would also pay out in January. November would pay out in February. December would also pay out in March. And so you can see here in October, I had a payout of $4,603, but January was $7,618. So let's get into the detail. You can see the majority of that paid out in week 2. $5,281 paid out in week 2, specifically on the 10th and the 14th. The next biggest payout was on week 3, specifically on the 18th. And the third biggest payout day was on the 31st. So let's get into the detail. All right, so starting off on the 3rd, I have PFXF, which is a preferred stock ETF, paid me $66.46. Then we have Shaw Communications, Canadian Telecom, $47.15. PPL, which is an electric and natural gas company, $17 there. A couple of bond ETFs, $14 and then $4.54. We got Brookfield Renewable, $2 there. Tullis, which is another Canadian telecom, $26 there. Kimberly-Clark, $5.80. Then we got General Parts, Genuine Parts, and in total I got $47 from there on the 4th. Moving down, we have Getty, which is a REIT, $43.82 there. Pepsi paid me out $68.60. We got another Brookfield product here, $2.61, and another ETF, very small. Now, week 2, this is where the big payout comes. So we've got Altria, ticker MO, and the total payout for Altria was $2,722. And then the payout for PM, Philip Morris, was $891.31. So that's where the big payout happened on the 10th of January. Moving down, we've got some BlackRock ETF products. Total there was $27.62. We have GlaxoSmithKline, which is a British pharma company. And then we get into Ben Franklin Resources, which is one of my favorites. I got $298 from Ben. IAPR, which is a REIT focused on the cannabis area. I got $450 from IAPR. O, which is another REIT, monthly payer, $239 from O. We have Starwood, which is another REIT, $542. I guess I should do a REIT video here soon. Then we have ITW, which is Illinois Tool Works, $2 there, brand new position. WPC, which is WP Carey, $90 from that REIT. And here's GlaxoSmithKline again. When you see two entries that are actually paid in completely different places, so this one was paid out on the 13th and this one on the 18th, that just means I hold it in two different accounts. And one is the TD account and the other one is the Fidelity account. Sometimes when they're international or foreign stocks, they get paid out at different time frames just due to processing. So after GlaxoSmithKline, we've got BCE. I got $464 there, but you can see another holding down here at $649. Again, what you see here is just the difference in the processing of the different accounts. So BCE, which is the Canadian telecom. Then when you see STAG, which is a industrial REIT. I got, let's see here, $52 from Stag. We have Cardinal Health, brand new position for me. APAM, which is one I've actually exited from. So this will be probably the last payment we see from APAM. We have Oracle at $35. Medtronics, which I'm kind of hot on. Brand new position, $3 from Medtronics. Brandywine, another REIT, very small position. My last BCE payment, which is the Canadian Telecom. And you see a couple of Eaton Vance products here, which is ETF and a bond. All right, and then rounding out week 4, we have Cisco Systems, $14 from Cisco. We have BNS, which is the Bank of Nova Scotia, one of my favorites. I got paid out $262 here, and then a secondary payout of $133 down here. Again, 2 different holdings. So we have BNS, Canadian Bank. We have Shaw Communications again. This is a monthly payer, so in one account you see it paying out at the beginning of the month, the other one pays out at the end of the month. I got another $34.60 there. Another Canadian bank, which is Canadian Imperial, ticker CM. We have a ETF, $2.92 there. Canadian Railway, 75 cents there. I already covered the BNS. JP Morgan, total of $103 from JP Morgan. A total of $68.87 from Gladstone Commercial. RMI, which is a muni fund, $3.91. This is another one I've actually exited out of, so we won't be seeing. And then we have PGX, which is another preferred stock ETF, $3.73. Brand new SYK Stryker, which is medical company, $1.40 there. And then last but not least, SPHD, an ETF. Guys, this is a major accomplishment for me. To exceed $7,000 and approach $8,000 means I'm getting much closer to being fully autonomous in terms of income. So how did I increase the dividend amount so quickly? Several ways. I outlined a plan of attack, was very specific, and executed. Ultimately, I wanted to consolidate down from over 100 positions to a smaller number. So first, I sold the last of my CDs to invest in income-producing assets, and therefore had cash to buy into the September and December dips. In November, I looked closely at businesses that I didn't feel like I fully understood or felt comfortable with, especially those with high yields that had run up, and I got out of them. I really looked closely for businesses I felt like had run up too much. I sold some non-dividend producing growth stocks that had also run up to turn them into cash machines for me as I believed the market had gotten too hot. I looked closely for higher yielding stocks above 4% that I believed could be a value or steady state of income. For example, some of the Canadian highly regulated telecom and bank stocks. And you can see some of the stocks I picked in my video about my favorite Canadian stocks and why they are tax advantageous. I also sold low dividend ADR fee foreign stocks and put that money into higher yield US stocks. So in sum, the main drivers of income for this month were consolidating into ticker MO, PM, BCE, BNS. And you can also see my video on Sin stocks where I go into more detailed review in this category. I'll leave you with this. The way I think about portfolio optimization is like a bonsai tree. You don't have to dramatically exit from positions and start new ones. You can snip a little here and allow to grow a little there. So try it. Take a fresh, non-emotional look at your portfolio with the intention of optimization. I'll actually continue to optimize a bit more into the quarter as I see opportunities to shift and as I go into a phase in my life where I'm looking to turn my investments into cash a little bit more to allow me to be more work optional. Okay, guys, that's it for today. I hope you enjoyed this income portfolio update. As always, I encourage you to keep learning, keep implementing, do your research, and then put it into practice. As a reminder, I'm not a financial advisor, so keep in mind these videos are for entertainment and inspirational. I'll see you on the flip side.